with recording. All right, so looks like we got a rotation back down. Looks like, let's see what this looks like in here. All right, so we got a good amount of single print action going on. So this whole thing is now single prints. So single prints just kind of gives me an idea that whenever I see a single print, it's basically you had no buying or selling inside there anywhere. Like price spent no time there, so it literally just went through it. So it's not a place that price wants to be. No one's gonna be buying or selling at these places. So you could think of them as they're gonna either act as major resistance points, or it's just gonna act as thin air once it goes down to it. So let's see where we're at. So right now, our point of control is a little bit higher. It's about right in there. Got a node here, and then we got another node up here we want to be aware of, right? Because so here are your volume, distributions, right? So now we're getting into the extremes of it. We got some single prints up here we need to be aware of. Right, so even though the POC is migrating, this is our current POC. All right, so now I kind of already at where I thought we were gonna go today. Um, so let me preference this by this. Do any of you guys look at TPO charts or any kind of volume session charts? Like, do you know what you're looking at when you're looking at that kind of stuff? Or like, do you have an idea or anything like that, or just like the first time? Yeah, session VP. Yeah, session VP is good. Lupin's been really working with that. I turn it on as well. I just use it's a little bit easier for me to look at the TPO chart because it gives me similar data. I can see the days clearer. Session volume profile is more like, in the session type deal. Um, but I'll break it down here. So I'm just looking at this like where all the volume was for the last few days, right? So these little purple lines, these are my single prints, so areas where price went extremely fast through it, and I had no participation from either side. Um, when I look at a print like this, right? So we got volume on this side, and I got a heat map on this side of what was going on here. So I could see the initial balance was here. We pushed down below initial balance. It kind of stuck there. But if I look back here, you know, every day POC is moving up, so that would be bullish right now. So now, after a few trend days up, now we're rotating back down. So when I go to find these targets, um, coming out of a day, like when I'm coming out of this day and moving to the next day, if I'm opening below, which we opened below this POC already, and we're already well below this one, so now I'm going to start looking down into this day's curve. All right, so the majority of the volume's down here, and we're already down past that POC, right? So this single print right here, it landed at the very end of the value area low. So it came down, it swept into the value area low, and that's when it pulled back. So now we're going to have to see, is it going to look for lower prices? And if it does look for lower prices, so you got a little bit of a volume node here. Got this little area here. Got that little node, and then this right here that's just thin air. Bunch of single prints right there. Basically, that's just thin air. And then I got that my value area, my POC, right? So now what I'm gonna do is I'm gonna come and I'm gonna mark the value area high. And then I got a prior POC. So if we're gonna get down to this curve, I wanna know where that's at. And there's no guarantee that we're just gonna, go all the way down there. We might rotate back up, but I need to know what's down there just in case. So now we got POC. Now here's a prior day POC. So we're gonna mark this little guy on here. And all this is doing, like right now, is I'm building the story, right? I'm building the story of what may happen, what could happen, um, and giving myself that definition, right? So this is helping me to build my story here. So there's the prior day by area low. So now as you see, they're printing on this side of my chart. So now I can go over here. So like this is all the stuff like you wouldn't see. Like you would not see any of this inside any, normal candlestick chart. You can kind of guess at it, but you never really truly know what was there. So that's the kind of the nice things about these things. So that kind of gives me a bearing of where like the volume is and like where buyers and sellers aren't, right? So now if I go to my regular view, I go to my regular candle chart view, and now I can see like this is a major area of value. So we came out, we went into discovery mode. We couldn't find any higher levels to obtain. Well, we swept over here, but um, now we're going to pull back into this big area of value, right? So come down to the 2 hour, see where we're at. We still got this little teeny tiny little gap to fill here. This was a Asia gap, I believe, but it's still a little gap here to fill. So I want to be mindful of that. then as I look around, kind of see what this is doing. All right, we're coming down, we're retracing this leg. So go on here real quick. Let me get an idea of where we're at in the run. All right, so it looks like we're at the failure swing level of this right now. So now is it going to return back up now, start going back up, or we're going to keep pushing on down? We're well below yesterday, POC and all that. Actually, it's not showing me that. So where's that? So now I'm just, I'm trying to get an idea here, right? So we're back in value now. So we pull back down. So we're going to come down and we're going to fill this, which we still got a good amount of stuff to the downside as well. So that needs to be filled out. Because we got all this stuff down here. This right here is your 2-hour value. All right, so I know that's my 2-hour value down there. Go to price acceptance. We got this area in here. It's kind of skewed out, even though there is a big, large thing of volume in here. But I like this one right here. And then we got a little bit of area down here we will have to come back into. So this area right here I'm interested into, but it matches up with this value area down here. So I'm not really going to draw that on. So now we can see where this thing is kind of inside here. So it looks like we're going to try and keep pushing down for the moment. It's 9:07, so let's get some of our extreme levels on here. I want to see the weekly open. I want to see the weekly high. I want to see the weekly low. Month open. Month high. Month low. Previous day high. Previous day low. Previous day close. Here's my extremes. Okay, so now I got all my extremes turned on, all my price levels. Let me take this off real quick so I can bust it down. So now I'm looking around at my extremes, like where are the next extremes at? So I have my previous week low is going to be down here. That could be a target for a sweep or to go long. That could be an interesting place. Take this thing off real quick. All right, so now we're down so far, right? We're down in this big single print area. So I'm gonna take this down just because I was showing you guys what it was. So now we got this big single print area. So I think price is gonna try to get back down here. It came down all night long. So now we need to do, it's 9:11. So now I'm gonna come up here and I'm gonna turn on my ranges. So my pre-market range is set from 530 to 529. And then I also got a Globex range that starts from 9 to 930. And then I also have my initial balance range. My initial balance range is what's really going to tell me what the day is doing. So as you can see right now, we have a huge pre-market area. Huge pre-market. Let's bring up the volume profile, see what we're doing. Okay, so obviously we're well below POC and value area. So get this little volume pit. So when price comes back up there, it's probably going to come through there. You see how these single prints line up with these little volume areas. So take these off because I know they line up. Where's our previous day close? So our previous day close is all the way up here. So we're really putting in a massive gap, like 200 points. A single print is an area on the chart where price went extremely fast and it found no buyers and no sellers. So you can think of it as like a immediate rejection or no acceptance. Like price just moves through there. There was no buyers, no sellers anywhere through there. So now we have this very, very hard move down, right? So now I need to kind of figure out, we've already taken the overnight lows, right? We've already done that. The overnight highs are way, way, way up here. So let's see the overnight highs. Overnight highs are pretty much up here in Asia. And it's the week high. The week high is also the overnight high. So obviously we're not going to be getting back to those right away. So we're in a downtrend of a day for sure here, right? Got this big old value node here. It's kind of where we're at now. So now price is going to either come down and to check out this little area. See, as you can see where we're at now, right? So we came right back down and we came and went right into this value area low, right? So this is where we're holding at right now. So we broke out of this volume profile and we came into this one. Now if we break this one, we need to find the one lower. All right, so we got all this area in here, so it should come down to right in there. Small bit of this RTH to fill out right here, so it might do that. Kind of like that little area right there. right at that value area low. So now it's when we come back up, right? We come back up on the open, or we're going to be able to get back in this value area. So one of the ways you can use value area high, value area low. So right now we're very much outside of all that stuff, right? So obviously we got a little bit of downside target, but or the prior untouched POC. Yeah, no. So prior day POCs, prior day value area highs, value area lows, and stuff like that. Those are always the price targets, right? Because you think of it like um, auction market theory is based in value areas, right? It's assuming that everything that's outside of value area is an imbalance. It's an area where the market has deemed that there's unfair participation, right? It's not a balanced area. So what we're doing is with the volume profile, we can look on the chart and see when price starts to fall out of certain value areas and we need to figure out where it's going. We look back at other session volume profiles and price often hovers back to points of control, POCs, value area highs, value area lows. So right now, we're trying to continuously break it down. So we have this little bit of acceptance right here. Price just moved back into the acceptance and it got pushed down again, right? So obviously we know if it breaks this value area here, it's now outside this bell curve. So it could potentially come down into the next area. Now there's a little bit of acceptance down here. So we'll have to see how it works through it. But as you can see, it goes to these levels and it strikes them and it decides whether it wants to go any further or not, if there's anything down there for it to get, right? Now, obviously, this move's already way in the making. I wouldn't be surprised if we got some kind of manipulation going on. Um, so let me do this. Let me see where we're at in the manipulation category. So, so put that down there so I can turn that off. Those are my previous day lows. So these two are going to be pretty important. Your previous day low and your weekly low are going to be really important right now. Because when price comes back up, this is going to be a really, really hard point for it to get through if it gets bullish. Ba, 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 ba. Previous day close. So let me turn these off real quick because I pretty much have already seen what I need to see. I don't think we're going to go down there, but I'll put it on there just in case. But really, like the most important thing that I'm doing here is I'm building where price can and can't go, right? That's what I'm trying to get an idea of. I'm just turning settings off right now so I don't see as many lines on my chart. All right, so obviously we're pushing down here, so I think that's going to try to get down here. We got a couple extreme targets right here that we can use to kind of move off of. So now if I go back over here and I look at my TPO chart, so we're starting to get a little bit of acceptance down here, right? So this whole thing is acceptance, which is right in here, which we already knew. So now we push down, right? Now we got these tails, these long tails in here. So this isn't really, really strong volume area. So when price hits something down here that it wants to reverse off of, it's going to go through this pretty quickly and get back to here. Because you can see how this one's a little bit thicker. So there's a little bit more price. So when I look at this, so single prints, right? When I'm looking at this chart, this histogram, if I zoom in, I see all these letters. It might be hard for you guys to see, but these are all letters, right? All these letters reference a time point. So every letter that you see on here is 30 minutes in price. So the more letters that you see, the longer the the longer time price spent there. The less numbers, less letters you see, the quicker that price was. So you see this right here, how these things, there's single prints here, then it goes double prints and the volume picks up. You see how there's basically no volume in here. All these little single prints. So this was an area where there was no buyers and no sellers, and nobody wanted the transact price. So that tells me that was a very, very unfair level to go through. So obviously price is going to need to come back into this level. Now when it gets here, it might get here and reject out of it, or it might push up through it really, really quick. But that's a single print level. That's a very, very low volume area on the chart. So it could act as resistance or it could act as just thin air. So you don't see them very often on the chart. So you do want to notate them when they do happen, like the next is down here. But they don't really happen very, very often. So the majority of the volume is going to be back up. So the market's always going to try to get back up to where the most volume is. One thing you guys should also be aware of is that we're still on holiday for banks and institutions and stuff like that. They're not really trading until after the new year because their books are done. So this will be the one of the few times of year that retail can actually move the market. So this is what I would do for like a pre-market, right? And set all my parameters. At this point, like when the market opens, I'm gonna be looking for sweeps on extremes. I'm going to be looking for continuations. I'm going to be looking for pre-market high and pre-market low sweeps and stuff like that. And I'm also going to be looking for a gap fill, even though today's gap is pretty substantial. So I don't know if we'll fill all that back up. As pretty big. So let's see, this area value 733. That's about 40 points there. If I want to see what's really going on inside these even more than this, I can turn on my cluster profile. And now I can actually see what the delta looks like. So there I got some stacks. So these would be areas to short off of. So now I can see when price was going down here, what the volume was and what the delta was, right? So when I come down here and I'm looking at this stuff, look at these numbers, right? As it's going down, you should see volume pick up. If it's going to break out to the downside, you want to see volume go with the delta. You can't just have big selling delta and no volume with it. As you can see here, it went from 937 and down to 400 back to 650, and then when it got to this level down here, it had absolutely nothing. So 10-0. What this tells me, this is a completed auction. This is as far as this candle wanted to go down. 33.1, 96.15. If there's not a zero on part of this, it's not a complete auction. So this is a complete auction as of this moment. These weren't, which is why price came back down to it. So now if I look up here, this is an incomplete auction. This was a failed auction. That means there's still buyers and sellers up here. These stacks, though, these are going to be areas that I can look for price. I can get little shorts off. Probably not as much this one. I'd probably like these ones a little bit more because they're bigger. Um, what this is another good area right here. I mean, it's not marking on here, but this is a little stacked area. So when it made this stack, as you see, price came back up to it, and then price just dropped straight away. So when price retraced back into this stack. It hit and made a retrace of 40 points. It dropped 40 points out of that stack. So these are going to be areas that, I'm going to be interested in. So I'm going to go up here to the one that hasn't been touched yet. I'm going to say this. And I know this is a bearish stack. I'll go up to these bigger ones here. It's a bearish stack as well. So all this is doing, it's telling me where the big sell orders were inside those candles. So now when I go back down to my trading time frame, now you can kind of see. But you see, so this was a stack that was a little bit down. This is where it hit the bottom of the stack and it just retraced, right? So look how thin this is. 704 to 710. So that's 6 points. So if I'm taking a trade off this stack, I'm only risking about 6 points. Because the theory is once it gets up into this, these sell orders should push it back down. So I'm using everything in my arsenal here to kind of check it out. So if it goes up there, it could sweep the Globex pre-market, and it could still come right back down and sweep out this and go down lower. So it looks like we're holding below the 618. Looks like that top bearish stack is gonna line up with a failure swing of sorts. So we're coming into market opening, right? So what am I thinking here? I know Globex is right here, so we could sweep Globex and it would come into this stack right here. So I could put a limit order here, 704, 711. I risk about 8 points. That's a viable trade there. But it is the opening, so you do want to be conscious. Price is going to move fast. So what I'll do is I'll kind of, let's see, I'm at 8 points, so I'm really shooting for down here would be my target. So if I'm in 3 micros, 8 points, I mean that's like $50 risk to get all this. So I'm going to do this right here, and then my TP is going to be these lows, and then my stop loss is going to be just above. I'll put just above this candle right here, something like that. The idea here is it's small risk because we're on the open, right? I want to see it push up to the stack, maybe sweep out Globex real quick, and see if I can get an immediate push down. And if it doesn't, it's a small enough risk where I could set up and I could stop and wait for the next trade, whatever it might be. So we're pushing into it now. There it is. I hate when it does this shit. I was hoping it would wait a little bit to get there before the open, but Went a little bit above this stack already, so we don't want to see it go too crazy. But we want to see it deliver on down. Now, if it starts to stall, I'll just cut it off. So right in here, there's some resistance. Oh, get it. All right, we're going to take it. Just like that. So did you guys see how I did that? Any questions on this one? I mean, that one went out perfectly. But do you guys want me to break anything down on this setup right here? Because this is a setup that I'll use. But did you see how like it when it tried to get above that stack, it kind of got above it, but it didn't. That's why I kind of moved off of it a little bit. But what it did is, especially right now, guys, especially today, tomorrow to the first, like this is excellent for you guys to practice because institutions are not going to be heavily praying. So this is a really good time to actually practice true price action. But that's my morning trade. So now um, I won't take another trade now until the IB sets up because that was a good trade for me. Now I will help you guys though, right? So this was a pre-market low. So here's what you guys should look for next. If we push back up, you guys should be looking for a trade out of this bearish stack to see if you can get this because it lines up with this value area up here because we want to see price come back up, re-rotate back down, right? So this one's done. We filled this one out. So now you can either wait for price to come back up here, see if you can short back down this way, or you can wait for price to, this is a pre-market, so I can sweep out this pre-market, but you got to be careful though because it has this RTH and it has this monthly extreme down here too. So it could come down here for this and get, a bounce off this too. Ice storm, no power. Sounds like you need to move to Florida, bro. It's like 80 here right now. Okay, so here we go. It's moving back up. I didn't want to take this trade, but I will just to show you guys. I'll do one. I'll sell one limit here, and I'll put a stop loss, right, right above those wicks. And then for that, I would try to get back down into here. So let's kind of come down just a tad. Because even though the stack is here, when the market gets up there, it feels that pressure, and it might just pop it back down, or it might just miss it. It might just come right over here and grab this. Yeah, that's okay. I wasn't willing to risk any more than that. My first trade, and this is what it is too, guys. Like you see how my first trade worked out, and wasn't even really interested. If you guys weren't here watching, I would have got up and went and done something else. Um, but let's see if we can get the second trade to hit. The important thing is to here, like once I pick this spot, like I'm not gonna chase it. If it comes up with a few points and I don't get it and it drops, I'm not gonna chase it. See right then, like I could have just went ahead and got it, but I set the parameters and you have to wait. Like this is where I want to be in. This was my defined risk. So this one, if it goes up and gets it, hey, cool. If not, then we make a different plan later on. All right, so it just went down and bounced the Globex pre-market. Let's see if I can get a nice push into this stack. Push it. Nope, not yet. There you go. It's in. All right. So now we got to get back and see if we can get this stack to push it back down through Globex. And that's why I didn't rush too, guys, because, yeah, it came right back up into that stack. It gave me another opportunity there, so. Now your targets here when you come back down, right? Your target's going to be top of the Globex range. It's going to be middle of the range or the bottom of the range. You kind of just gotta wait and see how price, is dictating when it goes back down there. But we did get a bounce off the top of the globe X, so just trying to work up through that stack. All right, so they're giving some buying pressure down on Globex. It's getting back, trying to get reaccepted back into the old value area. So that first rejection, the first entry and rejection. All right, so it's getting reaccepted back. And that right there, guys, is why you don't chase, and it's why you define, what you were doing. So now it's going to come up to pre-market high. So now I'm going to look for a sweep of pre-market high to see if they want to take it back down. The key is, guys, is the small things, right? So I'm going to come right up here. We're going to give it one little thing there. We'll try to take it to the other side of the range. And then we'll look over here and we'll say, okay, so we're in the trade, looks like. So where's our stop going to be? I'll put it right up here. See if it's going to sweep. I might have to go a little bit higher there. See if it's going to sweep this little area here. And see if we can get a push back down, or it's going to push up on through. It's going to push up on through. That's okay. So I don't really care about the other two trades because the first trade was my actual trade. So I don't really care about those. But did you guys see how that first trade was the one that mattered, right? So came up here, I got that first rotation out of this bearish stack, came right back down into there, and then this was your opportunity to go long out of there, right? So now we're pulling back up into old POCs. This was the previous day low, I believe. It also could be going to try to do a gap fill right now. Oh yeah, I know that is. So this was the other strategy that I usually look for that I wasn't paying attention of, but this was the gap fill, Monday gap fill. So you have a gap down and then you fade it and you go back the other way. So where was previous day's close? Man, I can't believe I forgot this trade. This was the one I was actually looking for this morning. So 4 o'clock, so right there. So the previous day value area low was the close. So we're about 50% of the gap right now. On Mondays, gaps tend to fill, right? So this would be your long target. So basically, you want to wait till price does whatever it's going to do here, and you want to get, so right here, if it comes down to this pre-market high and you get a hold, then you can go off the, go to the gap fill. I'm not going to take it though, because I'm pretty much, that first trade was good for me. I don't even know how much it was worth. Oh, sweet. So now that first trade was worth like a few $100, $400. So, so you have to wait for that short, man. So there's this thing called a gap fill on Mondays, man. Gap fill is very, very prevalent, and I think we're gonna get a gap fill here. So right now, what I would be looking for if I was you guys, I would be trying to go long off this pre-market high because we came up, we got it, and it's way past a sweep. This is way higher than a sweep. So now I'd be looking for a price to retrace into the pre-market high, get you some support, and I would go long and look for the gap fill. Because on Mondays it's like 80% that it fills the gap. And really the trade was down here, and I missed it because I was focusing on the stack. So this is what I got to get used to too, because normally when I trade, I don't live stream trade. But I know a lot of you guys want to see what I do and my thought process behind it. Um, So I'm gonna have to learn this too, where I can still look for the things I'm looking for and kind of tell you guys at the same time what I'm looking for. Because this was a gap down fade. So the way I do that is I have a gap formula that's right here on my computer. What's actually on a piece of paper in front of me. And the things that I look for, right? So I'm looking for the gap size, I'm looking for the prior day trend, and I'm looking for the context of the market's in, right? So we didn't have a prior day trend day, which is great. We opened down out past value of last week's, which is great, and we opened down. So that's actually a gap fade. So what that means is I should have went long down here after my first trade. I should have longed it, but I wasn't thinking about that because I was explaining that trade to you guys. But that's one of the so let me talk about this other stuff. So um coming soon in the Discord, like we're gonna have a couple different things here, right? So I have my small class guys, and small classes 1 week, one class per week on Sundays. We do one live class and kind of comes with homework and stuff like that. And it's a slower version of what the mentorship is going to be. So what the mentorship it's 4 weeks, and it's 3 to 4 classes per week. And it's very, very hands-on. You work with me a lot because it's a smaller group, and I do a lot of things to kind of work towards what you're doing. But we go really, really heavy and really, really deep into the stuff that I was doing here this morning, the delta footprint charts. We go deep into, POCs and finding areas of value and how we're going to target things and extremes and stuff like that. But it's just a very, very in-depth version of the small class. So the small class will eventually get there, but it'll take a lot more time because the higher level stuff is generally in the mentorship, and it's just at an expedited pace, right? Because not everybody wants to do it 1 week at a time, but it just depends. Like, some traders who have a very good grasp on the market will want to, go faster, and that's what the mentorship is for. And people who want to, or maybe who haven't learned as much, aren't as quick, will do the small class. So it kind of gives the best of both worlds. What's going on, Corbin? I didn't see you in here. I wasn't looking at the chat, but all right, so so that was the entry right there, guys. That was your entry to go long, and then you're going to target PD Val, which is also the gap fill. So from here, you could have targeted 779. I mean, that'd be almost a 100-point gap fill. I mean, 90 points is pretty good. Is anybody in the long right now? Anybody take the long? 808. Oh, you're trying to catch the breakout? Oh, danger, man. You gotta get it right off the pre-market high. Oh, you're trying to be a breakout trader. Yeah, so I'll kind of break it down to you guys. Here, I got let me read you guys my morning routine. So I have a morning routine here. It sits on my desk. It's things that I'm looking for. Yeah, good deal. All right, so like my morning routine, like I have it right in front of me, like when I'm trading, right? Because I always like to be like, you know, on the same track. I want to do the same thing every morning. And sometimes, like this morning, I didn't have it in front of me, and I was talking to you guys, so a little off, but that's okay. So right in front of me, I have a paper on my desk that is my morning pre-market New York session. I'll read it to you right now. So my opening pre-open is 9:15. It's about 9:15. I need to sit down and I need to start looking at my charts, right? The first thing that I'm going to do is I'm going to check for red folder news or any high impact news that will affect the market movement. Then my third step is I'm going to define my prior day trading sessions in terms of day type. So one of the things that I teach in the mentorship is day types. If you guys know anything about Jim Dalton, he believes in classifying each day as a type of day, and that can give you bearing on future sessions. So that's my third step is I determine what kind of trading session that the last session was. For me, it wasn't anything that was the only thing that would affect my gap strategy is a trend day. If it's a trend day, I don't want to do a gap strategy. So it wasn't a trend day, which means my gap strategy was good to go. My fourth checkbox is going to be mark my key levels. My key levels are going to be my priority lows, my priority highs, my overnight lows, my prior day POC and value area high, value area low, any weekly or monthly extremes that are within the trading range, and then any other sweep targets or RTH gaps that are anywhere like within that range. Then once the market opens, I switch over to my 9:30 to 11:30 boxes. So this morning, I did not calculate my gap fill right away. Otherwise, I would have known that we were going for the gap fill. I have a calculation that I do for gap fills, whether I want to see if it's going to like close or not, right? So I'll take the gap price, which is the open price that we just opened at and the prior close, and I'll subtract each other and get a number. And then I'll take that number and I'll divide it by the prior close. And if that number falls within zero point 0.3 to zero point 0.8, then I'm looking for the gap fill, or there's a higher probability of the gap fill. And then for that, I'm just waiting for the reversal signal, which we got, which was my short, where I exited out of my short when it didn't go down and take a new low. That was actually your cue to go long on the gap fill, right? And the trigger is the break above the first 5 minute candle. So I can show you that real quick. Um, that'd be a good one to show you guys here. So let's look at the first 5 minute candle. All right, so 9:30, 9:35. So we haven't broke above the first 5 minute candle yet. So technically the first 5 minute candle is there, 30 to 35. Well, it's right there. That was your break above. So this is your cue to go long on the gap fill right here. So this was your 9:30 to 9:35 candle. As soon as price came and flipped above it, that was your cue to go long for the gap fill. It also can give you good support too. So it comes back down here. You want a re-entry, you can also get a re-entry there. So the same would be since we had a gap down and we're fading the gap, we want to go long. So it would be a break of the top of this 5 minute candle. Now, in a different instance, if it's a gap up and we get the same thing, you're looking for a break of the first 5 minute candle to the downside, and that would give you that downside target for the gap fill. Looks like you're going to get a re-entry right in here, but it's giving you a big old reversal signal too. So all it did to come up here and sweep these highs. It swept these highs and it got rejected out of this little area of value. Still a good place if you were going to try to, go back and get that gap fill. So let's see, we got 820 to 664. So that's a pretty good size range we got going on here. So back to have a good one, Dan. Have a good flight. So back to my day types, right? So in my day types, I have a bunch of different specifications of how big this range is and what that's going to mean for my day forward, right? So this is a pretty good size range on Nasdaq. So what that tells me is this is not going to be a trend day. Okay, so I'm not going to be looking for trades to start breaking out. I'm just not going to be looking for that right now because the range is a little bit too big for that kind of day already. So now I'm gonna start playing with it inside the range and looking for the gap fill is still good because it's still kind of in that area, but get rid of this real quick. Okay, so now I'm going to take the existing IB range and I'm just going to throw some fibs up there and kind of get an idea. So here's the range, right? So I know this is going to be some kind of range day where it's going to range out and probably come back in. You could get a double distribution day. I don't know that yet because IB is not finished. It won't finish for another 30, 40 minutes, but that's fine. So now I'm already expecting some type of range day or some type of extension and redraw or something like that. So I'm not expecting a crazy trend day. So now what I'm going to do is my trades are going to be based in this middle area or on the extremes. So this is going to come down. This is about the reverse 618. Not a bad area to go long and try to get back because it could come back like down here, right? Then this first 5 minute candle, and then it could come back and hit this, which is the gap fills up here, and then pull back down into the range. That's acceptable too. So now it's coming back to that 5 minute candle. It's going to start trying to touch into it a little bit here. It's coming back down to Globex. See if we can get a hold somewhere down in here. Using the body of this 5 minute candle, that first 5 minute candle. See if it wants to hold, because if it goes down past there, it's going to go down this way anyway. So and also dictate, like guys, you should dictate your size based on what the range is. Good size range. We don't really need big size to, get the job done. Because you can always build in too, as prices starting to move like in your favor, you can always add in contracts. That's a thing that most people don't do. A lot of people add to their losers, but they don't add to their winners. That's a problem. Like you need to not add to your losers and you need to add to your winners. All right, so my initial risk was 40. So when we get above 40, I'm going to take my initial risk off the table. Make this pretty much a free trade. I'm targeting the prior day's low, even though I know the gap is right above it, just because it's an extreme level. As long as I stay with my entries right here in this middle range or on the outskirts of the range, like I can keep my risk pretty tight. Because it's gonna be similar to like the day we had Christmas Eve. Like it's gonna be very range bound usually. It's gonna keep trying to rotate back into the range, and you're not really gonna get those big explosive moves that we normally are looking for. Like this is not gonna be a trend day whatsoever. I can already tell you just by the way we're setting up. We're gonna be in this range. So I'd like to see some candles start to push up a little bit, make some longer bottom wicks here. Let's see what the volume is doing here. All right, so we're kind of in the value area low here. So this is a decent place to buy too, right? Because even though we're below the POC and the POC could absolutely act as resistance, we are, above the value area low. This is a good, buying spot. So if price was going to rotate back up, we're in a good spot for it. It's not like we're going long at the value area high or something like that. If we could regain this POC, we should push up pretty quick. Now what I'm doing is I'm switching over to a delta volume chart. So now I'm going to see if I got some absorption going on here, or there's some bigger players right here that I can't see. Okay, so there's a massive order right there. All right, so we're going to go ahead and we're going to exit this. Okay, so the reason I'm exiting this right now is I got this massive buy order right here. You see this massive 2,000 print order? Price should be going up. The fact that price is not going up, it means it's being absorbed and it's going to be pushed down. See, there goes price. So let me break that down to you guys. You see this massive order block right here? This is massive. This is delta in volume. You see how big this is? The fact that it did not push up and didn't keep pushing up and then was going to turn bearish on me, that means that I'm being absorbed here by a bigger time frame participant. So I need to exit that trade. It's not going to work. Yeah, there's all your cells stacked up in there. All right, guys. So would you explain once more about how to judge trend there? Not yeah. So it's about range and stuff like that. So our next class for small class is going to be about the day types and how to dictate the day types because I can kind of tell you about it, but there's literally like I have pages on each and how to identify them. So here, let me give you an example. So if this was going to be a normal day, so the normal day is there's signals for the structure, right? So price establishes the initial balance in the first hour, extends range in one direction, and then closes back inside the range. So that would be a normal day. That's what I'd be looking for there. So I'm looking at the previous day and I'm judging that. So the next day is a normal day variation, and that is it establishes initial balance, it extends range in one direction, and then it closes outside of the initial balance. So that's a different day type. Then you got your trend day. Trend days are usually specific when there's a very, very small IB range. Like, did you see how big the gap we put in this morning was? It was like 200 some odd points, right? And then our actual range was about 180 already. So that's a very, very big IB. It's a very big initial balance range. So that tells me, statistically speaking, 75% of the time, that will not be a trend day because of how big that range is. So think about it like this, Olivia. If you're going to have a trend day, what do you need? You need compression in the market. So when trend days are happening, they don't always happen first out. When you get that first, pop and go and it just goes all day, that's like 15% of the time that happens. It's a very, very finite amount of time that that really happens. So think about it like this. If you're in a tight range, right? If you look out on the bigger charts too, because you got to look on the big chart and see where we're at. So if you can see that we're in like an area, we just left a trend for a few days, and now we're consolidating or something like that. When you get that first small IB balance, so for the first hour from 9:30 to 10:30, you get a very, very small range. I would say sub 100 points on Nasdaq. Think of that as pressure building in the market. So you're getting pressure, 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 and then it's going to explode and go one way or the other. That's how I identify a trend day. So when you see that small initial balance range, that 9:30 to 10:30, that's that pressure is building. It's building, it's building, it's building. Is it a guarantee that it'll be a trend day? No, it's not a guarantee, but it's a very, very high probability. So when you see that small initial balance, think, hey, we're building pressure here. You see a larger initial balance, if we haven't made a good size move out of this initial balance by 11 o'clock and we're kind of in it, then you can expect, hey, look, I need to play I need to play the range today. I need to play the extremes. I need to play the middle. If I'm in the middle, I'm going to be going for an extreme. If I'm at the extreme, I'm going to be going towards the middle, and that's how you got to play it. And this is what we're kind of getting into in small class too, but it goes even deeper in the mentorship. And the mentorship is just like I said, small class is one class per week. The mentorship is 4 classes per week. So it's just a very, very, extreme, faster version of small class. 729, 768 chop zone. Let me see. 729. Yeah, I would say that because there's a lot of value. See how these POCs stacking up here? That means it's going to be very choppy through here. So another thing that you guys can do is you can look at these POCs, see how they're migrating, see how they start to migrate down, right? And now it's coming back up. So you can use it just like this as well. So now if I go down here, let me see if there's a failed auction down here. Okay, you see this right here, 1010? That's a completed auction. So like we saw earlier, there's no reason for price to come back down to here. And here's a POC. Let's see if this is a pretty big POC number in here. So let's see if we can get some support here. There you go. It kind of gave you some support because it's trying to shift. It's trying to shift back up now. But you got to wait till the buyers come in. So what you'll see now is if you look at these numbers right here, they look really, really big, but they're not. This tells me that institutions and banks aren't back because when institutions and banks are back, they're huge. They're 20,000, 30, 40, 50. They're huge numbers. Yeah, actually, I got that for you right now. I actually did ES specifically for you, Olivia. So ES, hold on, let me get to that paper. Yeah, no, I put it off to the side because I'm trying to do everything because I know everybody doesn't just trade Nasdaq like I do. Um, Let me find that. Okay, so where is it at? I was just looking at it. Okay, so for gap size on ES, if a gap fill is going to happen on ES with the highest probability, it needs to be between 6 and 16 points. So that's your gap fill strategy for ES. If it's within 6 to 16 points, that means that gap will fill. Now, as far as range, yeah, 6 to 16 is the gap fill. So like a Monday gap fill. So the only time that you guys don't want to go after gap fills is if it's a gap into a new trend, if it's a earnings gap, or like a breakaway gap. Those are the three gaps you do not want to try to fade. Okay. Now, if you get a FOMC or a CPI gap or CPI gap, so some big emotional news. If you get one at the end of it, so if you have 3 trend days in a row and you're getting to the end of that trend and it gaps up or down, that's a valuable gap that you can fade. Or if it's like a Monday gap, those are the ones that do the best. So we call it common gaps, right? So in the market's in a range, do a common gap. A common gap fill rate is 80%. So with a common gap, if it's a gap up, you're going to fade it back the other way. If it's a gap down, you're going to fade that back the other way. So the two gaps that are the best gaps are the common gap and the exhaustion gap, which is the one at the end of the trend. Yeah, I love RTH gaps. They're my favorite. So the two gaps that you want to avoid are breakaway gaps and continuation gaps. So those are the two gaps. So a breakaway gap is when we're coming out of a high time frame consolidation and going into a trend. That's a gap you don't want any part of. You do not fade that gap. So, and another one is if you had a strong trend day on the day before and you're going to continue trending. So if we had a really strong trend day yesterday and say we gap up today, you do not fade that gap. That's a strong trend gap. The chances of it coming back down are very slim. And for the gap strategy, like I'm looking at it right now. I got like 7 pages here on the gap strategy and what to look for. And this is all stuff that you guys will get part of the mentorship because with the mentorship, it comes with the giant workbook. Because there's just so much stuff in here for the mentorship. So I've got it where like you could put these pieces of paper out on your desk, and right now I can just trade by time. So as that first trade that you guys see me took, I would have been done because I would have got the trade that I was looking for in my first set. Now I'm not going to come back for my second set until after 10:30. Now all this is lined out right here in front of me in my workbooks, right? It tells me what to look for. So here I'll go over what it was this morning, right? So my step one this morning was my pre-open. Okay, that was from 8:30 to 9:29. I mark my levels. You guys know my levels. I calculate the gap percentage to see where we're at. Now, my step two is 9:30 to 9:45, right? This is where I'm waiting for. This is the gap strategy sheet. This is where I'm waiting for my signals. Okay, if it's a gap down, I'm looking for a bullish reversal. Okay, I'm looking for price to open low, then immediately rally to a 5-minute green candle. Then I'm going to wait for a higher low within the first 15 minutes, and then I'm looking for the delta or the volume shift, and then I'm looking for my trigger is going to be that break above that 5-minute high I was showing you guys. That's going to be my trigger. So that's the trigger on my sheet for the bullish, and then I also got one for the bearish. Then I got the types of gaps that I do want to use and types of gaps that I don't want to use. And then I give you guys entry method and a scaling out plan, and like here's a perfect one. So scale out, right? We scale out. If you're going to be in 3 contracts, you can scale out one at the 50%. You can scale one out at the value area high, value area low, or you can scale one out at the full gap. Now, as far as time, you need to exit your gap fill if it hasn't made any progress in 30 minutes. And if your gap fill has not been completed by 11 o'clock, you need to exit your trade. And then I got a bunch of other, if price does this, if price does that, and stuff like that. So it's a really, really good stuff I've been working on all over Christmas for you guys. It's for me too, but But all right, guys. So that's the morning session, and that's kind of how I do it. I know it's about we've been on here about an hour, so I don't want to make this recording too long because I gotta get it to upload on here. Hey, Corbin, can we upload this thing to YouTube and just put a YouTube link? Yeah, I can, Myron. I'll make a shorter video of that because I want to make this one just a little bit shorter and put it in that series. So what I'm gonna do, guys, is I'm gonna close this one up and I'll come back for if I see something setting up for the IB because the IB closed at 10:30. I'll let you guys know. I'll ping everybody and put it up here. But that's gonna be my next area to look for to trade. Is I'm gonna be looking for after the IB, so about 10:30, 10:40. I'll come back and kind of take a look and kind of see where we're at. But yeah, let me get this thing loaded up and I'll catch you guys later. Not a problem.